Good afternoon, everybody, and welcome to today's webinar brought to you by the Chartered Institute of Credit Management, hosted by corporate partner Esker, titled Improved DSO with Data-Driven Credit and Collections. My name is Becky Sharp, and I'm the Marketing and Events Manager here at CICM, and I'll be facilitating the session for you. Before I hand over to today's host, just some very brief housekeeping, if I may, just to let you know that this session is being recorded, and a copy of it will be sent over to you following the session, and also be uploaded onto cicm.com in the coming days as well. We do ask if you could remain mute throughout the session, but if you do have any questions for our presenter today, then feel free to type them in the Q&A or chat box at the bottom of your screen. That's all from me. I am now going to hand over to Matt Tipper, Business Development Manager from Esker, to start the session. Thanks, Matt.
Thank you, Becky. I'm just going to share my screen. Oops. Hopefully everybody can see that. I've got many things appearing on my screen now. Let me just get rid of those and then we can start properly. There we go. Can everyone see that okay? Becky, can you see that?
Coming up? Yeah, that's fine. Thanks, Matt.
Wonderful. Thank you very much for inviting us along today. And yeah, today's session really is about talking around Esker's credit management, the credit risk management and collection solution, how they're powerful on their own, but also when we bring them together and use the data from both, how they become even more powerful to accelerate cash flow and improve DSO. I've got an agenda today, so we're going to be talking again around the powerful solutions as they are on their own, what they can do, how they can add value for a lot of Esker's customers and a lot of companies, and then what we get when we bring them together. So some of the benefits, some of the outcomes that can be achieved through that. Then we're going to go on to how we are using AI today. It's a hot topic, and how it's embedded throughout our solutions and where we use it and where it adds value for our customers. And then when we come to the end, a quick summary, and then we'll take any questions. I think we've got an hour today, but I think we'll have plenty of time for questions at the end. So I look forward to hearing those. So let's start. We're going to start in credit risk management. So Esker's credit risk management solution has been around for quite a while now. And really, we're going to start at the beginning, and that is the onboarding of customers. So new credit account customers. And this is a kind of a hot topic at the moment for a lot of our customers and our prospects. Can be a very manual and laborious task to onboard customers. It can be done either via a string of emails, manual documents being printed out, and it can be very disparate and very kind of a frictional process. What Esker does is we provide a digitized onboarding process effectively. You can customize this, you can create your own terms and conditions, you can have your own documentation look and feel in there, and it takes you and the customer or the potential customer that you'd like to onboard through a standardized process to create a new credit application. As it's digital, then it's all done and every bit of the process is captured along the way. And you can do things like upload documentation, tax certificates, profit and loss statements, financial reports, and you can really customize it to the information that you want to capture as you're onboarding a new customer. And again, it's very prevalent at the moment in terms of know your customer processes, risk mitigation, anti-money laundering processes to make sure that you're capturing all that information correctly and efficiently through when you're onboarding new customers, to do it quickly and securely. Once they're onboarded, we will then have the ability to monitor the credit risk of the customer. And you can really create and configure your own alerts based on the information and settings that you want to put into the system. So you can set it to do that based on the information that Esker's providing within the platform, based on the receivables performance or the payment performance of the customer. But you can also intertwine that with data from external parties, such as credit bureaus or insurance providers. And that leads on nicely to the next point, which is that Esker's credit management has the ability to integrate with pretty much most of the major providers and credit bureaus and some insurance providers as well. So not only can you monitor the risk based on Esker information, we can directly connect to credit bureaus to pull back just not just scoring information, but lots of information about that the credit bureaus provide, such as things like changes of directors, any CCJs, and they can create a credit alert within the system as well. We also have an approval workflow process built into our credit management solution. So if you need to change anything within such as a credit limits or any payment terms, or someone asks for a credit limit increase, that can all be done through the system, and we can make sure it goes to the right person for an approval process, which can be stamped digitally onto the customer's credit account and have a full audit trail for those as well. Along with that, we can also automate credit decisions. So we can create our own scoring rules and approval workflows and matrices to allow you to automate, if you wanted to, some of the decisions that could be very manual, but also pull out and for review any ones that you want to go into more detail on. And then we capture that nicely with giving you all the metrics that you'd expect to see from your credit risk performance. Not just things like credit onboarding time, but things like credit scoring or risk versus aging as well. So that's quite a quick high-level overview of that whole solution. We'll go into more detail around the credit alerts, and there's different types of credit alerts that you can set within the Esker solution. This could be a periodic credit review, so a customer that you want to do an alert, or sorry, do a credit review, whether that quarterly, half yearly, or annually. And then that will come up in the system in one of the workflows for you to go and look at all the information in one place and do a quick credit review on that customer. We can then also do credit limit alerts if you use credit limits. So we can do things like if customers approaching a certain percentage of their credit limit or their authorized credit limit, then we can pull out a credit limit alert to check that, and we can see any unbilled invoices, any orders outstanding, any overdue invoices, and we can make a call on that and do a review. And as I mentioned earlier, we can get alerts based on the data coming from credit bureaus as well. So whether that would be a score alert or a significant change in their score or their level, or something that's changed within that customer, a direct change of address, change of ownership, change of structure, then we can pull out an alert and highlight that to the credit risk teams. And we can also pull in blocked orders as well, coming from the ERP system. And now in our latest release, we can even predict blocked orders. So we can look at the historic patterns of ordering, of invoice, of overdue, and try and preempt any blocked orders, because we know that they cause frustration in providing a service or providing a supply to the customer as well. And what our customers love about the solution as well is you can traffic light it as well. So you can determine the priority order of what you want to look at first, whether that's blocked orders, whether that's score alert changes, and you can prioritize that within your workflow in the application as well. Talking about automating credit decisions, again, you can configure your own credit scorecard within the application. You can weight this. So Esker will provide its own internal score for the customer based on their risk and payment performance, but you can weight that towards any external risk data provided by the credit bureaus as well, and determine what's right for you in your business. And then you can create and define those credit rules to different types of groups of customers as well, and then pull out alerts or any changes to the teams based on those rules that you set up within the application. And then you can escalate those if they sit outside of those workflow or those configuration rules that you've put into the system, automating simple credit decisions, but getting to the more important ones and more riskier ones being reviewed by one of the team or one of the senior leadership team as well. And the system also compiles everything into a nice dashboard as well. So you can make sure that you're monitoring all the key KPIs that you want to within your own dashboard or within the team's dashboard as well. And it can be completely configured to whatever the key KPIs that you need to have as a business or within your department. Whether that is the credit risk profile of your customers versus their aging, whether it's things like onboarding time, which I know a lot of my customers are really hot on at the moment, whether the types of reviews or alerts that you're getting across your customer base as well. It's really providing you with great insight into the performance of the business and the credit function as well. And next, I think we have a poll question. So I think Becky should be popping up a poll question that's going to appear on your screen very soon. There we go. I've seen it come up on mine. And the question is, which aspect of automated credit management would benefit you the most? It's a multiple choice question. So you secured onboarding, customer and credit data, simplified credit reviews, monitoring credit limits, or real-time reporting and analytics. So you can select one or more of those in terms of what you think is going to add value. And I can see lots of voting's happening in the background, which is very interesting. Okay.
Let's give it a few more moments and then
yeah, there's still lots of votes coming in, I can see. Okay, that's interesting.
Okay, and I will close the poll now. Thank you, everybody, and share the results with you all. There you go.
Really interesting results and interesting. Yeah, so real-time reporting and analytics scoring very highly there. So that kind of says to me that getting access to that information, it's and we talk about this a lot at Esker about information and data being siloed in different systems and different areas of the business, and really consolidating that together is going to add a lot of value. And that kind of speaks with the second answer as well. We're like centralizing that information in one screen. So that's really good. So I think if I close that now, and we can move on. So we've talked about credit risk management. And then next we are going to talk about credit control or collections management solution that Esker provides as well, and look at some of the key features and outcomes that can be achieved with that solution. So yeah, collections management solution in Esker is effectively like an enhanced CRM, I think, for credit control teams. We all know, sales teams have CRM systems, but the collections team having a CRM-like system, I think, adds lots of value to the process. And it enhances it as well. And we can do very clever things with all the data that we bring into the system. So we can predefine different strategies that we want to and how we want to approach customers with. So we can automate delivery of electronic account statements, of payment reminders, and there's lots of different rules that we can use, and we can enhance that by using historic payment performance information and AI within our solution. And we'll come on to how that combines with credit management later in the presentation, but we can also infuse the collections strategies and performance with credit risk data as well to increase that automation, and to help the teams focus on what's more important, what's higher risk, what's higher at default, as well. And as I mentioned earlier, it's CRM-like, so you can see all the history and every bit of information that's in one place against the customer record. So I can see when we sent them a payment reminder, when we sent them a statement, when a recent dispute was resolved, or when a case went legal, or how long an invoice was in dispute for, or any email correspondence from the customer as well. And that just is super helpful for when you're going to make a call to the customer, or when you do an account review, that you don't have to go to lots of different places and different systems. And we saw in the poll about credit risk management of the value of having all that information in one place, and it being accurate as well and up to date. So having real-time information and information about your performance as a team and performance of customers is adding a lot of value to monitoring the cash and collections performance. And what added value you get with Esker as well is that we provide an online 24-hour customer service portal as well. And this is included as part of the solution. It's no additional, it's just standard in our offering. And what that does, it gives you the ability to surface all your invoices and copy invoices to a customer portal. And then it gives customers access to those to go on there, retrieve those at the same time, They can message you through the platform as well, instead of creating kind of inbound traffic to the collections team. They can download copies of invoices, view their recent or historic statements, and now they can also make payments through that portal as well as we integrate with different payment processes. I know it won't work for every customer. It depends on your customer profile, but we do see a good uptake in a core of our customer groups using that platform, and it does take a lot of inbound pressure from the credit control teams as well. So that's a very high level overview of what we're doing from a collections point of view. We also have the ability to record or record collection calls in the platform as well. So we give you all the information about that account, about all the open invoices, and we give the ability to record that call within the solution. We now also integrate with Microsoft Teams. We integrate with what we call soft phone integration. So you can click on the hyperlink of the customer's number to dial them, and your Teams or your dialer will dial that customer out. We'll summarize the call for you, and you can add in the call transcripts as well from Microsoft Teams against that call, so you can review that at a later date as well. And we can record things like promise to pays, which in turn will integrate with other areas of our suite of solutions as well, such as cash application, creating effectively a digital remittance, saying that we've spoken to that customer, then we know they're going to pay these invoices in X amount of days. So we can create a digital remittance in our cash application solution. So when the payment comes in, that will match up automatically. And vice versa of that, we also do the opposite of where if we receive a remittance in advance of the payment, we will create a promise to pay in the collections tool. So that will mean it will be taken off any kind of call list or overdue payment reminder cycles as well. So it just makes it much more easier to control and manage. And you can schedule follow-up calls in here. You can escalate calls in here as well. You can see things like the invoice delivery status of invoices that have been sent to customers. So it's all centralized in one view, meaning that you have all the information you need before you make that call to the customer. We also, and this is becoming a key point for lots of my customers, is providing a collections forecast for all your AR cash flow. So we can use the promise to pay information, and we're now calculating through the AI of the system when we believe customers will pay. So we calculate a payment prediction date, and that's using a lot of information in the platform. It will do things like learn when the customer's payment run goes out, what days they're likely to pay on within the month based on their historic performance. And that will go into not only kind of the future chasing strategies and methods that we use, but also it will bake in a rolling forecast of cash flow into the system as well. So you can start to see that what's scheduled to be paid, what's promised to be paid, or what's forecasted to be paid based on the AI predictions of the solution as well. And that's kind of helping a lot of my credit managers and AR managers and finance managers really get a lot more accuracy and confidence in their collections forecast at month end. What we also add in as well is the ability to create tasks within the system. And this is, I've seen lots of great examples of this recently with my customers using the application. And it allows you to create your own defined task lists that you can assign to different people within the team or outside of your team, but within the business. And I think that's the greatest value of this, is that you can assign certain tasks, whether that might be out the remit or control of the credit control team. So it might be a customer service department, it might be supply chain, might be logistics, warehousing, to whether that's an escalation, whether it's a dispute that needs to be raised. You can raise that task, you can assign it to them. They'll get an email. If they're not a user of the system, they'll still get an email with that, but they'll get a link to a form that they can go in and record any information, upload any documentation that they've, or proof of deliveries, things like that, and other supporting documentation for disputes. And they can assign that to the dispute, so you can see that and you can track that through. We can set up completion dates, and we can automatically escalate that to different members of the team should it not be completed on that date. But I can also track that through and see where it is in the process. and set up automated email reminders once they have been completed. So I have the peace of mind that I know someone's addressing that, and it has been addressed and it's been completed. And as I say, it's a great way of tracking through disputes, and it's what a lot of our customers do to track their disputes. They can classify what dispute kind of category or type their disputes are, whether it's related to billing issue, whether it's related to a delivery issue, a pricing issue, and they can create those different task and dispute types within their application, and they can log a dispute, track that all the way through, and as I mentioned earlier, add any documentation to support that. And then we get a load of great data out the back of that. So we can start to see, what's causing where our disputes, right? Is it a billing thing? Or do we need to look at the start of the process and make changes there to prevent it further downstream? Is it simply that there's a pricing issue, there's a data issue, there's a funding issue, there's anything else there? So we can start to track those through and really get to the bottom of any of those disputes and understand not only where are they coming from, but how long it takes to resolve them, and how we're improving that over time, right? How we're reducing, the time to resolve a dispute and the amount of cash that's tied up in that dispute as well. And that's all adding to the benefits that you can achieve from the solution as well. And we are at another poll question. So I think Becky's going to launch. You should see another poll question coming up now. There we go. Wonderful. Wonderful. So which aspect of automated collections would you benefit from the most? Again, you're not limited to one answer. So it could be performance, monitoring, could be sending reminders, tracking outstanding balances, escalating overdue accounts, and managing customer communications. Very, very split on this one. So we still see a lot more answers coming in.
Just a few more moments.
Yeah, we'll give it a few more moments, let everybody have their time to put their answer in. Okay.
Okay, and I will end the poll now. Thank you, everybody, for entering, and there are your results. Thanks, Matt.
Brilliant. Thank you, Becky. Yeah, really interesting. Very split amongst everybody. So managing communication, customer communications is finished top there. And that is, I think that's really interesting because that's kind of in line with what I'm seeing and what I'm hearing from my customers is that that's really putting a lot of pressure on teams at the moment in terms of the volume, the intensity of those communications, where to store them, having access to them, sharing that information as well. So that's really, really interesting. Thank you. Right, we shall move on. So I'm just doing a quick time check. We're all good. So then, next we're going to talk about the benefits of integrating both of them. So when you bring the information of both credit risk and credit collections together, what do you get and what are the outcomes that you can achieve and see through that? And really, I think we've talked about it already. It's about sharing information, right? So we kind of see in our customers that certainly what I hear in the market is that credit teams struggle to get information siloed, so it's in lots of different places. So I might have my overdue here, my credit risk here. I might have to log into a credit bureau here or an insurance company there. And I've got all these different platforms that I'm having to manage on a day-to-day basis to help me do my job. And also, we're lacking, from a credit risk perspective, sometimes we're lacking that combination of that view of comparing risk with the overdue performance or the overdue receivables. And that's the benefit that we add, right? So we bring that data together. So when I'm doing a credit review, I can see all the information, not just about the risk, but also the overdue, the payment performance, the history of conversations with the customer, any disputes that have been raised, any billing blocks that have gone on. And that just allows me to analyze that data much better, and vice versa from a collections performance as well. I can start to see the credit risk indicators that are coming from the credit team as well. So I can start to see, what risk profile are they, what risk group are they in, what are the credit bureau saying about that customer as well. So we're increasing by sharing that information and bringing it together. We're increasing the efficiency of what we do on a day-to-day basis, and we're maximizing and knowing where to put our efforts to maximize our revenue, and improve visibility as well. And this is it. So this is what you get as part of Esker, is that visibility into that customer, and the breadth of information that we can surface is really powerful. So the payment performance indicator, are their average days to pay, their pay rating, their average days past due, and we're also bringing in things like now comparing that customer with their industry peers as well through our own data lake of information. So I can start to see that customer generally pays, all customers in that industry generally pay 2 to 3 to 4 days late, and we can start to surface information of what they're going to do to make them pay a lot faster. I can see all that information that's been stored against that customer throughout their life cycle. We talked about earlier the onboarding process, the documents that we upload as an onboarding process in terms of, financial documents, certificates, insurance, tax documents, that's centralized. So, that those mad requests that we get, we need to surface this, we need to go and find that. Well, we can do that because it's stored centrally in Esker for us as well. We can see any previous alerts the customers had, whether that's from an external bureau or an insurance company. We can see any previous blocked orders. We can see any issues that have been happening with that account as well, the business situation, and yeah, the risk and aging, the total exposure, and our own internal credit score versus an external credit score as well. So a breadth of information that you can bring together there as well. And then we can do some really powerful and cool stuff with that, right? So we can determine the credit risk through Esker, and then we can let that feed and drive our collections process as well. And that's where I think it gets really interesting, because we can find out if a customer has what we determine high, medium, or low risk, based on lots of different indicators that you can control in the system. But then you can group those customers together and drop them into a collection strategy, right? So, for example, I might have a high-risk customer, my credit bureau is saying it's high risk, my outstanding overdue and receivables performance in Esker is saying it's a high risk. So I want a different approach and how I collect from that customer, how I communicate with that customer. I might want a much more hands-on approach because they're high risk. So I can set up strategies that maybe say, right, I'm going to call 10 days in advance. I'm going to send a reminder email 5 days. I'm going to call on the day. A much more hands-on and kind of more touch-based approach, right, for those high-risk customers. But whereas if they're in a low risk, they always pay on time. They're a good payment performance, low risk indicator. I'm going to have a much more automated approach for that customer, right? So I don't need to dedicate as much time. I can let the system's automated features of sending communications out via a statement, via an email, take over that. So it frees my time up to focus more on those riskier customers. And the great thing about that is that it will automatically adjust as well. So if the payment performance and risk score improves, then we can move that customer into a different risk category and approach on how we chase them for payment as well. And that's really driving my customers and the Esker customers to a much more effective approach when collecting more cash, collecting it much more efficiently as well. And yeah, we can do other things like prioritize calls. So when we go into our call list, as you can see on the screen there as well, we need X amount of calls to be made today. And I'm going to prioritize the critical risk one based on that credit risk information, kind of infusing with the collections performance as well. And we've seen already we can start to use that data to predict cash flow as well and improve our collections forecast. So that's some of the benefits that we're seeing as well. We've talked about it a little bit already, and we're seeing lots of different conversations happen around AI. So we thought it's important to cover this subject in this call here today. So you've seen it maybe throughout the presentation already, but Esker has its own AI engine that sits in the background. It's called Esker Synergy. We have over, I think, 50 use cases of Esker Synergy in our platform today. So our platform doesn't just cover credit management and collections, it also covers every other aspect of the order to cash cycle and the other side as well on the source to pay cycle. So we have 50 different use cases that are being used today by our customers, and some have been in place for a fair amount of time as well. And they can be defined into different groups, really. So we see what we call AI automated tasks. So much like you've seen me talk on the last slide about putting those customers into risk groups dependent on prediction of their risk, prediction of their payment performance, and automatically moving them around, and then sending them payment reminders and statements based on that risk. So that's a form of automated task that we will do using AI within the system, like forecasting predictive payment dates on past history, and then determining that collection strategy around that as well. So that's an example of how we do that. We use it elsewhere, such as automating the cash application process. So taking remittance data, matching that with bank data, and then automatically posting that to the ERP. So that's another example. One thing that we are doing that is we're really seeing the benefits and our customers are today is, I guess, AI augmented tasks. So where humans remain in the loop, but it's supported by AI to make much quicker decisions and smarter decisions as well. A great example of that is in our collections tool. So what we do is we take emails in, so we're monitoring the credit control inbox. We're monitoring any responses to the communications we've sent outbound from Esker, and we're looking for emails and communications coming back in from those customers. And what we're doing is we're automatically classifying all those emails, and then we're triaging them effectively, automatically using AI to work out what the customer's asking. So we'll go through the inbox, we'll read the emails, we'll classify them, and then we'll start to suggest responses. So the customer might say, the information on this invoice is not correct. And we can propose a response to that saying, we will investigate that, we've raised the task, or we can serve up a document as well. So the customer might ask, I haven't had a copy of that invoice. And Esker's clever enough to go, suggest a response, surface up a copy of the invoice in an email back to the customer, and then the collections agent or the collection credit controller, we can just say, yep, I'm happy with that. I will send that email out. So it's augmenting using AI to support the day-to-day operations of the credit controller and the credit team. And then the next stage is AI autonomous tasks. So that's probably where we're moving to. So another example is today we have, and we'll talk about this in a bit, effectively an AI assistant or an AI agent within credit that you can ask questions to. You can ask to different reports, the status of a particular account, what's happening with it. And it will go into the system and it will surface up that information and present that to you. But the idea behind that is it's continuously learning, so it can start to predict what you're going to ask it and the questions you're going to propose to it, and almost before you've asked, surface that information up and present that to you. So that's kind of you setting the destination, but AI taking hold of the wheel effectively. So those are kind of the three aspects that we're looking at when it comes to AI across the credit and collection space. We've talked about some of the use cases already, but we're going to go into a few more details. We've talked about payment predictions, so that's something we've been doing for a while now. We've talked about recommendations, so responding to emails, presenting options back that you can tailor, learning the types of behavior and messaging and email responses that you put in your emails and building that into the brain and recommending that moving forward. Data extraction is a big thing as well. So we're going to talk about a specific use case in a second of how we do that. But we do that. We're probably the market leader when it comes to doing that, especially on financial documents. So we do that today. We've been doing it for years for supplier AP invoices, for orders and order management, for remittances recently. And what we do is we build a huge model of data of existing documents that we've seen from all our customers throughout the world. I think we process billions of documents through that engine every year. And we learn the layout using imaging, kind of facial recognition technology that we've developed to learn where things are there on the page, so we can extract data at extremely high rate from those financial documents. And yeah, the synergy agent, which we just talked about, which is that assistant, that's is proving real value to a lot of my accounts at the moment. I was speaking to a senior finance manager and a senior finance director the other day, and really interesting that they're starting to use the agent within Esker to ask questions of the system that they might normally ask to their team. So, can you tell me the position of this account? Can you tell me what's overdue between 60 and 90 days? Can you tell me my top 10 customers with a high risk that are over 60 days old? And the system will go away and then present that to them, put it in a graph form, put it in a report. And that's great for people that might not use the platform every day. So might not turn up to an Esker training course, might not log into the platform every day, but they can log in and ask a question and it will start presenting that information back. So I think that's a really interesting use of what we're seeing. Another great example is in the credit management space is how we're extracting data from financial documents. So financial summaries, profit and loss, balance sheet documentation. And you can upload a document, add it, a PDF, any type of, or a Word document or a financial report summary, and we will go and extract and pull all that data from it, create all the, the liquidity, the profitability ratios in the background, and analyze that statement so we can see, are they moving in the right direction? What's their profitability look like? And do a real kind of in-depth analysis on that document. So that's a real powerful one for us. You can also load in historic documents as well, so we can start to do trending over times as well, and we can then use that information in our internal credit score calculation as well. So we can start to build any risk that we see in analyzing those financial documents into our credit reviews as well. And yeah, I just talked about this, the Synergy Assistant. So here's an example of us asking a question like, I want to do me an account summary of this current credit situation, this current account, and it's given me a high level summary of that particular account. So, and then now it's going to start basically suggesting next steps on there as well. So that's how we move. That's how we're moving now. So things like, would you like to review the top 5 accounts, or would you like a credit summary of something else? So it starts to learn the inputs that you're asking it and surface up more information into that as well. So providing new prompts to help guide users. So in summary, I think a really strong case for integrated credit and collections. As I say, information can be siloed, and bringing it together adds a lot of value in terms of not only minimizing risk, being more efficient, maximizing revenue, improving things like forecasting, improving customer service as well, which I think is vitally important. This is Esker's full suite of solutions. So we provide not only solutions in the order to cash space, but the source to pay space through a single platform. So our customers come to us maybe with one particular challenge, and they're safe in the knowledge that we can help them with lots of other challenges across their financial area and financial space as well. And in terms of who we are and what we do, yeah, we provide this platform. We've been doing it for a long time, so we know what we're doing. Over 40 years of experience, a global experience as well. So if you do business internationally, then we've got you covered because we have over 15 locations throughout the world, and knowledge of those financial processes in each part of the world as well. And lots of different people, and over 1 million users and 3,000 customers using our platform today. So a real strength in that area. And I'm going to stop talking and and let anybody else have the opportunity to say or ask any questions or yeah, any
Thanks,
feedback.
Matt. Thank
No, that's
you.
great.
We have
Thanks.
no questions come through just yet. Give everybody a few moments to see if they want to reach out. Alternatively, of course, then you can always reach out to me and I can put you in contact with Matt. His details are on the screen now. But oh, we've got one just come through. Often credit and collections integration is highlighted as offering benefits. What are the processes in the O2C cycle benefits from integration, and what are they? Yes, what are the processes in the
Yeah.
O2C cycle benefit? Yeah.
Yeah, definitely. So I can think of a few. So we're seeing lots of like invoice delivery. So um invoice delivery used to be fairly straightforward. You send an email to the customer, but it's becoming more complex now as portals are coming into play or government platforms are coming into play in terms of making sure compliance with different tax regulations. So being able to see the status of that invoice is really valuable to the collections process. So I can see it's been delivered, it's been accepted by the portal, it's in dispute, and I get immediate kind of visibility of that. So I can address that before it becomes much more overdue. And that's one thing that we're adding into we have in our platform that enables you to see that as well. So I can kind of track the status of the invoice and have a lot more confidence in when I'm going to get paid and if I'm going to get paid, and helping kind of resolve any disputes earlier. So that's one aspect. I think we talked about another one earlier, which is the cash application. There's huge benefits there. You know, from those things like, the promise to pay. So we see this a lot with customers in that, I'll call a customer, they say they're going to promise to pay, um, and then we get the payment in, or we don't get the payment in, and they stay on a collection strategy. But we get the visibility of that if you have those two solutions together, right? So I can see a promise to pay has been made, and we'll create a digital remittance in the background. So when that payment comes in, it'll automatically match, and then we update that collection status so we can see immediately that we've been paid, and the vice versa of that. If we get a remittance in advance of the payment from the customer, then we know we're going to get a payment in 3 or 4 days, so we can take them off any call lists or any scheduled communications. Again, just making it much more efficient and having better visibility as well there. So a couple of examples.
Brilliant. Thanks, Matt.
That's
Appreciate
all
that.
right. Good question.
Yeah, great question. Thank you. Okay, I don't think I've had anything else come through. So we will conclude then. Everything that you've seen today will be sent over to you following the session, and the recording will be available online in the coming days as well. So if you fancy a recap, then feel free to go and have a replay. Thank you ever so much, Matt. And thank you, Esker, for hosting today's session. And thank you to everybody for joining today. And I hope to see you all again soon. Thank you very much.
Brilliant. Thank you
Thank
very much for your
you.
time. Take care now.
Bye
Bye bye.
bye.